Hi, hi. Good evening. Was it Teja or Prashant? I'm sorry, I did not see. I did not notice. Someone said hi. Oh, hi, Prashant. Hi Prabhakaran on the YouTube. Hi Prabhakaran, if you wish to join the live, so go ahead to the stockandprofits.com. Under webinars, you will find the latest link here, which is an ongoing. If you see under the webinars, we are live. So Prabhakaran, you can very well join in this one. It's a free webinar, you can very well join.
Good evening, Prasanna. This is Krishna.
Hi Krishna, how are you? Long time.
Yeah, I'm good going on.
Good to hear you.
Yeah.
Hi folks, hello everyone. We'll start by 9:06. Dinesh Rajaran sir, hi, good evening.
Before starting, I had one small doubt. Can I ask now?
Yeah, sure, go ahead. This is an open webinar, you can go ahead.
Actually, yeah, today I've gone through some charts and all. I observed there is a RSI divergence is bullish divergence is there in UPL and IOC in the daily time frame.
Okay.
Is that my understanding is correct? Can you check?
Which time frame you are seeing?
One day, daily time frame.
Okay. What were the stocks?
IOC and UPL.
Okay. Just give me a moment. UPL came up in my bear list, and IOC is also, you're seeing a bullish divergence. What was your divergence that you said? I think he said bearish divergence, bullish divergence. What? IOC, if you see, it is currently stepping into a short-term bear territory. This is the last swing low. It's been taken out. Every low has been successively coming down, and obviously that is a signal of being profit that is being booked here, and we are not going to see until that gap is complete. This gap is here. We are not going to see bullish moves under IOC if this gap is complete. Plus, the RSI is fine enough. It did very good here on the overbought. It stayed well on the overbought. Now it is time for IOC to book some profits. At least, if you take over to the weekly time frame, if this low is being closed, which is the 88, you are gonna see more drop into the stock. Now, since we are in the weekly time frame, this might happen over a few weeks because all these are imbalances. And we have a probability of the stock landing up to this 83-81 demand zone.
Okay.
Yeah, and the other stock was UPL, right? So UPL, again, I think it was under my bear list too. See, clear bear list. So UPL, like I shared, it's sitting on a very good demand. If this demand is taken out, watch for this level at UPI. I have also keyed in this level 550 to 510. This is an average level where you can watch out for UPL at this spot.
Can you see the daily time frame?
Daily time frame? Even daily is bearish.
Yeah.
I don't see any divergences here. The RSI and the price are respecting each other.
Okay.
Yeah, sure. All right. So it's 9:06 and it is Sunday. So and we are sticking over to the time here. Now I'll quickly just welcome everybody here who have registered for the webinar. It's a free webinar. Thank you for registering. You are all welcome. This is something that we try to do every week on every Sunday, and we go ahead and we analyze Nifty, Bank Nifty, and probable bullish and bearish stocks that we come across. Now, we try to feature members who are coming out with any ideas or strategies that they are following, because Stock and Profits, we are an open group. So if you would have watched the Telegram group also, everybody is good to post here, but we are not allowing promotions of any other thing. So if you have any strategies, if you think it could, if you think it is working for you, and if it is helping, if you think it is going to help others work for you, like how Prashant came up, we are going to share the VCP 2.0 today. That's what I call it personally, because I feel very close to VCP on that case. And Prashant will be taking over the stage after 30 minutes of my analysis, and I'll take your questions. So Prashant is gonna share with us 2 good scanners that has come out very well, and he also has his own developed his own indicator, and that is also gonna be shared. And viewers in the YouTube, if you are here, please do join the Zoom webinar. And just head over to Stock and Profit. Under webinars section, you will find this upcoming one, and you can very well register and join here. Right. So, like I said, UPL on the daily time frame, it's still sideways. So, if you would have heard about my liquidity concept, sideways is something where it is all grabbing in the liquidity. And new members who are joining into the group, on joining into the Zoom call, we have a poll here. So please do fill the poll, and let's see what is the analysis that's gonna go through. Now, before heading over to the good news and information, so we are gonna go over some stocks that has come under the bull radar. So after this, I'm gonna take you through the Nifty and Bank Nifty analysis, and then we'll drop on to Prashant's session here. So if you look at IOB has a very good daily time frame breakout. Now whatever the stocks that I am trying to share here is all based upon just technical aspects, and please stay vigilant and also have the analysis on your side too. So if you see IOC, we are sitting in a higher high, higher low pattern, and RSI has shot up very well because on the last day, IOC, Zeal, even Suresh, are you here? If you know, if you have been following Suresh, you would know how much Zeal shot up on the last day. Something was up on the last Friday. There was a Sony Z news. Let that be on the case. But this is one big imbalance candle, and whatever buying that was all sustaining here within the price ranges of 27 to 25, it shot up in one single day, which is why you are seeing a 13% move on IOB. Now, what is the next big thing that you should start to expect? Look out for a retracement at this point of level within the ranges of 28 to 27. That's the average range that the biggies are gonna look out for, and that is the same range that I want you to look out for. Now, after this, what is the next sufficient target that we can look out at? The resistance levels. It's going to be 31 to 33 is the next resistance level. Now, don't wonder, I never picked this high and I never drew it. I drew it only because with this imbalance candle that is sitting there, this is an order block, and IOB has currently kissed this order block. Now we are going to see some sort of a selling coming in at 32.10, and that is the point where the stock is gonna slowly start to retrace to this point or this point, and then watch for IOC, because weekly time frame still this body is sitting tight on the weekly higher time frame. So IOB is on the bullish radar. Now going over to the next stock that I want to discuss is Kalyan Jewellers. Now, how many of you are holding Kalyan Jewellers? Just put up your hands. If you see Kalyan Jewellers, I would definitely say on a weekly time frame, it's still standing strong, right, and bullish. So the next retracement levels that we can personally expect on Kalyan Jewellers is this spot. This is the retracement levels from 170 to 190. You might think why I am not passing over a single level rather than giving on a range, because biggies and institutions, they always point towards a range and then only they will start to trade. Now, if you are a very patient trader like me, you can very well wait for Kalyan Jewellers at this spot, which is going to be in between 152 to 140, because these are the order blocks that the institution has left. This is where we have an institutional footprint that is waiting on Kalyan Jewellers on the downside. Now, this is the last swing high. Like we always discuss, every last swing high being taken, the stock will always try to come down and take the retest. If you are looking for the first demand and if you are an aggressive trader, you can look out for this level, 189 to 178. Most likely this is where the stock is gonna retrace back towards its last previous swing high. And Rajarajan sir, yes, like you say, there is a divergence and RSI is sitting straight flat, which is why you see I have marked these two beautiful candles, because once a high is being taken, which was acting as a resistance, it has to come down to retouch this level in order to be bullish. Now, taking GAN into consideration, we always take up and we always look out and we always draw the GAN angles from here. And from this point, if I draw the GAN angles, as you can see, the resistance is right at the GAN angle. From this 2:1 ratio, it has very much shot up, and right, it has kissed the 1:1. Now, the next thing that if this is also bullish, if the stock is trying to break out this level, then somewhere around where this level, this high point is meeting, that is where we are gonna expect the next GAN level on the upside. So for now, we are also expecting Kalyan Jewellers, but it's still on the bull radar because the run is not done, right? Did you hear my words? I said the run is not done. After this good consolidation from 88 to 53, it was a breakout. Again, consolidation number 2. It was a breakout. Now, what is the next thing that you should expect here? Again, look out for a consolidation. So, keep Kalyan Jewelers on your slow moving watch list. And next, I will take up with GMM Fodler and we'll wrap over to Nifty. This is something, the stock that I don't want to look up. Reason is, I'll tell you. If you could see something very close towards to Bajaj Finserv, this is on the BSE. No, there is NSE. Yes. So stock is always volatile. It has wicks on the top, it has wicks on the bottom, hits every high and low, and as you can see, it is sitting tight on this consolidation. But whatever consolidation has been gone through of all these days, whatever buying that came through, it is now broken on one single week. This is all weeks. So if GMM Fodler is breaking this last swing high, you can expect the stock to take resistance at these two ranges, which is 1831 to 1874, right? So these are the two main stocks that I wanted to discuss. Now I'm heading over to Nifty. Now, as you all can see, in any new members, if you are here, please do fill in the poll that we have raised a poll, and we wanted to know what your view is on Nifty for the coming weeks. Of course, we are going to share, but I wanted what is going to be your view. Now, if you see, likewise, wicks on top, we always say simple thumb rule, wicks on top, sellers are stepping into the stock. That too, Nifty hit an all-time high of 19,991. If you would have been there on the last weekend webinar, free webinar that we usually host, I would have seen that it's a palindrome number that has Nifty has plotted on the all-time high, which had break its previous all-time high. So this high is 19991. Repeat it, it's going to be the same. Reverse it, it's going to be the same. It's a palindrome number. Now, looking at the past 3 weeks of data in Nifty, I know a lot of buyers have been stopped out this week if you are trying to do an option trading, because the highly volatile Wednesday, it was pretty much hit the stop losses of everybody, and it was all sideways and sideways and sideways. If you would have followed me on the Telegram channel, I told all these stops will be taken when we were discussing, and yes, when Bank Nifty head over to this supply level, it beautifully fell and it took all the stop loss, and now this demand level is not valid. I'll come to Bank Nifty on a very tight note, but looking at a daily time frame, Nifty is sitting at a very slippery zone. I would say the zone is very slippery, and as you can see, we have our very good favorite pattern that has been partially plotted, and once is 19,298 or 19,291, another palindrome number. If this magical number is being crossed by Nifty, you are going to see more slips towards the downside, very close to 18,800 to 18,700. That is going to be the state of Nifty. I know you all have voted for, most probably 44% of you have voted for neutral, and 33% of you have voted for bearish, and only 22% of you have voted for bullish. Now, you might think it is neutral. Yes, it will be neutral until it is crossing 19,300. 19,300 is the psychological mark of Nifty over here. And now let me get over to the basics. So gaps, what do the gaps mean? If you have been with me in the Telegram channel, I would say runaway gaps. These are called runaway gaps, right? So gaps are nothing but orders waiting. See the magic here. If I switch over to a weekly time frame, you are going to see very big elephant bars. What is elephant bars? Prashant is gonna explain that very soon at 9:30. 9:30 we are stopping sharp, and I'm gonna hand over the mic to Prashant here. So all these gaps are gonna be filled very soon if Nifty is gonna break, and I'm satisfied. I have a very good satisfaction that whatever the last previous 1, 2, 3, 4, 5 trading days of from Friday to Thursday, whatever happened on this last Friday, Nifty comfortably it had a good close below all these 5 levels, meaning sellers are stepping into the market. How do I say that? Look at this high. When the stock came down and there was a gap up, it did not even try to reach up to this previous high. Again, it dropped. When it tried to came up, again, it was not sufficient enough to reach this previous high. So we are seeing a downside structure where whenever the bulls are rising, bears are hitting hard on their head and they are trying to move the stock very much way down on the downside. And that is how you are seeing this sort of a structure being formed. And if this low is also taken out, which means whatever gains that the bulls had from July month till the August, at least the July end of the day, all these profits are gonna be wiped out comfortably by the bears. So this is the case for Nifty on the upcoming week. So you are going to see Nifty ranging between 19640 to 19300. Bullishness is gonna step in only if 19640 is taken out, which means the next stop for Nifty is going to be 19800 and not more than that, because we can clearly see by the imbalances and the order blocks understanding, we can very well clearly see there is less liquidity existing in this space and there is more liquidity waiting here. Now you might have think, Prasanna, you always say wicks on the bottom means buyers, wicks on the top means sellers. Now we are seeing a wick on the bottom with a green color candle. Why the market did not go? Of course, it was a wicks on the bottom. But where does this fall? Is this coming on a downtrend, coming on an uptrend? So that matters, right? So understanding the trend is much more important and the analysis is very simple. Just check the lows of whatever the current candle is. I'm giving you a free tip here. Just check the low and the close of the current candle. If the current candle's close is way much lower than the previous all the other candles, in this case 1, 2, 3, 4 and 5. In this case it's all 5. So if it is going more than these 5 candles, which means the understanding is more selling is gonna step in. So that's the view on Nifty. Now we always add the RSI factor over here, and our RSI is also saying red, which means I am not going to look for a CE opportunity on the option chain buying or a PE selling. I'm gonna look focused more towards the PE buying and the CE selling if I'm an option trader and I'm trading it for this week. So this is the case, and of course option sellers are gonna win this week until Nifty is gonna come out of this consolidation, else option buyers are gonna lose again. So that's the analysis on Nifty. So if you look at Bank Nifty, evidently you can very well comfortably see Bank Nifty has breached whatever it has plotted for the past 1, 2, 3, 4, 5, 6. For the past 6 days gain, Bank Nifty has comfortably breached and the head and shoulder pattern is done. Now, in correlation with Nifty, Bank Nifty has a lot more space to reach this slippery zone. Now, why do I call it as a slippery zone? Because every time you see when the market was trying to go up from this low high, higher low, higher high, higher low, higher high, equal low, higher high, 1, 2, 3, 4, 5, 6, 7, 8, 9. Where did you see this kind of a price action behavior that had happened previously? So a stock is coming down and taking support at the same time, 17 at the same place 17 times, and then it is starting to zoom up. And eventually when it is starting to zoom up, can you see that the gap that it has made over here? And look at the price action. The price action isn't even comfortable over here. If you can see at Nifty, I will take a case of Nifty. If you see at Nifty, price action is very comfortable. I'm seeing only bulls in action. There is only green candles and good body green candles here. But take the case of Bank Nifty. Look at that. There is wicks at the top, there is wicks at the bottom, there is even gaps, and there is even gaps here. And look at the consecutive candles that has fallen here. So when all this swing low, when all these swing low are taken by one single candle, be alert and be vigilant, and you are going to see more drop into Bank Nifty below this level, which is 44,200. This is the last swing low and this is the last swing high. Right now you might wonder, why do I have all these bars? These are alerts if Bank Nifty is gonna step up to pick up this order block that is existing here. This is a sell side order block that I'm waiting for Bank Nifty if it is gonna come up for another sell, if it is making a manipulation move, right? So Bank Nifty, watch out. Because why do I say watch out? There is a reason. I'm sitting comfortably on a demand zone. This is a good demand zone for Bank Nifty. And even if you want the perfect Paka numbers, I can give you 43,943 is a good bouncing point for Bank Nifty. This is going to be a good support for Bank Nifty on the downside, because after a very good uptrend, I'm seeing evidently a head and shoulders pattern. The neck has been broken, and the neck has been broken not just weak, it has broken very strong. And looking at the case of RSI, we always have RSI into our account, and RSI is at 40.37. Breaching below 40.37, we always say it's gonna go to the oversold. Now, where did I get this warning? I'm getting this warning way ahead, even before the price started to move. So if I'm seeing this correlation into the stock, I'm never gonna go for a buy. I'm seeing divergence on the overbought region, equal highs, but the Bank Nifty is making higher highs. Look at the suffocation of the candles. Look at how many green candles was like tiny green candles in between all the massive red candles. Bulls were begging for bullishness in those days. That is what is happening here. This is the understanding of the candlestick that you should need to take it into account. Bulls were literally begging on those days, but did the bears leave? No. They were completely off, and they kept the bulls in the range. This is why you see any green candle, it did not cross this high. It did not cross the high of this candle. Green candle, it did not cross. Also, one more thing, when you are seeing a candle within the range of a previous candle, the next day is going to be an explosive move, either on the upside or on the downside. Take this for example, right? You are seeing that this candle is stuck between this range. And what happened on the next day? Next day was a good volatile day. You would have seen V-shaped recovery. Any V-shaped recovery will end up in a hammer candle. And also look at this candle. This is completely being within the previous day candle. The previous day high or the low did not break. But the next day, it was a gap up and it fall very down. So even before the price started the move, which is why I just religiously take RSI into consideration, right? And watch out for these two supports, and this is a very good slippery zone for Bank Nifty. So what is the overall view? Bank Nifty and Nifty, they are definitely not in the buy zone. Either they are in the neutral zone or they are in the bearish zone. So that's what the analysis is here. And there are few other stocks that I had posted on the Telegram, so please do keep a watch on them. And right, I need to say this. So I have two things running, right? So the July batch, only 3 to 4 sessions are only there. We are done with 6 sessions. Only 2 more sessions are there for the July batch. For the next September batch, I'm gonna take only 15 members on the batch. So this is going to be a 8 session which happens on Saturday and Sunday. And I'm gonna add one institutional strategy from the advanced course, and I'm gonna give a free swing trading scanner link for free, plus a wow indicator. A wow indicator is nothing but it's gonna show you where you should buy and where you should sell. It's gonna pinpoint even before the price is moving, the indicator will show the value, and you are gonna get that for free. So in order to join the September batch, you can pre-enroll with your name, number and your email ID to this number that I am posting in the chat, 91507-20848. This is the WhatsApp number, and you can very well go ahead and ping this 91507-20848. So just your name, mobile number and validity. So we do have pre-enrollments for the September batch, but those who are pre-enrolling before August 15th, you are gonna get a promo code on the discount on the main price. And this is the first thing. Second thing, If you want to go, not wait for 8 weekends, take the course and then get into the stock market and then look into profits, I'm conducting an 8 days live market crash course starting this August 16th. From August 16th, it's going to be only 3 members in the course. Only 3 members will be in that live Zoom call, where I'm going to take you from 10% to 70% of probability on increasing the odds. You can go ahead and ask the current July batch members and the previous May batch members, and how is the course being taken. And I'm taking only 3 members because this is happening on a weekday from 9 a.m. to 10 p.m. and you can pre-enroll for this one too if you do not want to wait for this September batch. This is gonna start very much immediately. So these are the things, and I'm gonna keep promoting and showing these until Independence Day. So there is a sense of thing that is going into the stock market. This is the right time that you learn something good on a tailored method. So if you are interested, please do enroll into this. And now that I have done here, I'm gonna pass over the mic to Prashant. Prashant, can you unmute?
Hello. Hi,
Yeah.
am I audible?
Yeah, we can hear you, Prashant. Good evening.
Are you
How
able
are
to hear
you?
any disturbance or fine?
No noise. We are having clear cut audio on your side.
Wonderful. Hi, Prasanna. Hi, everybody. And I thank Prasanna for this wonderful opportunity to share some of the things which I have been implementing in the last few days or maybe few months. Like I will not say days because so I don't know how many of you here were available or present during the last VCP session. So one second, Prasanna. Am I audible now? Is it better?
That's much better now.
Yeah, hi. Oh, wonderful. So basically, this is, as Prasanna said, this is VCP 2.0. So for the people who are listening to what is VCP, it stands for volatility compression pattern. Okay, and the guy who actually founded this pattern is called Mark Minervini. So I'm sure you can do a good Google search on this, where you would be able to get a very good understanding about what exactly VCP is. And in fact, I think around December 2022, I remember Prasanna again hosting me in the same stocks and profits group, where I had shared a basic scanner for VCP, how to create the scanner both in charting as well as to create the scanner in TradingView. Okay, so I strongly recommend anybody who has not gone through that, please go to the YouTube channel of Prasanna. It is available under the live section. It is called VCP. So where I have covered certain basics, what are certain criteria which you need to consider if you are going to trade based on the Prasanna is sharing it on the screen as well. So basically it will tell you what are the criteria based on which you should look into a stock for cash market trading primarily. So again today my focus will be on choosing stocks for cash market trading. Okay, so before I talk about cash market trading, Prasanna, can I just share my screen? Is it okay? So that I will be able to. Hello? Yeah, okay. Can you confirm if you guys can see my screen? Wonderful. So first, let me basically explain what exactly these scanners are, so that you will understand. See, I have been using very simple things here. Okay, so one is the SMA. So if you go to the indicators and search for SMA by KGS, so only difference I have done is I have not done it based on close of the candle. I have chosen high, low, close 3. So basically, it will be the average of the 3. Okay. So there is an option of choosing EMA or WMA, SMA. Ideally, if you are looking for cash market trades, the best would be WMA or EMA. So I keep alternating between the two. If I get good patterns, I look at WMA or EMA, just to make sure that it isn't. But both are equally valid. I mean, WMA is slightly faster than EMA. okay, in terms of how it works. So the setup, basically what I'm doing is, I don't have a chart where you don't have a 21 EMA and a 200 EMA. Okay, you can put 200, 201, whatever. Okay, so I'll remove this. Okay, so let me explain the setup so that you will be able to understand what exactly I'm going to talk about in the subsequent, because I'll be going a little fast. In case anybody is not able to follow, please stop me, Prasanna, so I will maybe answer it. Okay, whenever I look at a chart, right? So for example, we'll look at a simple 1 hour chart for all practical purposes. So what the fundamental says is, see, whenever the 200 EMA is less than the 20 EMA and the 20 EMA is less than the price of the stock, in this case it's Nifty. Okay, so the stock is said to be bullish. You only look for bullish bets. Okay, so for example, in this run, right? So for if you see here, the stock was, where can you see here, in 2nd June 2023, though it was sideways to mild bearish, so the EMA was comfortably above the 200 EMA. And if you see here, so how this setup works is, basically whenever the market is range bound, okay, so there are 4 things which you have to consider. So basically you consider the last 21 candles. Okay, so since for want of this thing, I'm not able to, let's not take this particular candle. Let's from this candle, let's count 21 candles, whatever it is. Let's say at least this many number. So if you can see here, there is a range. So this is the high. Okay, basically I will take the high of all the candles and the low of all these candles, or the high could be the 200 EMA. Sometimes it will be, for example, in this case, here the low is the 200 EMA. Okay, so in this case, the low is the price of the candle, the wick of the candle. Okay, so it could be either. So this will become a range. Okay, so the last 21 candles, whatever you can see here. So whenever, this is basically called as magic 4. You can Google or type it in YouTube. Whatever strategy I'm sharing is not something which I invented. It is by a person called Oliver Wells. Okay, so basically you will be able to get whatever I explain if you just go to YouTube and type Oliver Wells magic 4. So you will be able to exactly get the strategy. So the whole idea is, I will mark the levels, the high, the low, based on the 4 criteria. What are the 4 criteria? Last 21 candles, the 21 EMA, 200 EMA. Okay, so based on this, I will mark the high and low. Okay, so when the market opens, okay, so anything between this zone is a no trade zone, because basically what happens is, it will take away the stop loss and usually it will go away. Okay, so whenever it opens below the blue line, so which is the bottom one. So let me, for convenience, so that the people will understand, let me mark it as red and green so that you will understand bull and bear territory. So if you see here, there are 2 zones which are marked. So whenever it opens above the green zone, I will look for long opportunities. Okay, the simple reason is because ideally, so for example, in this case, you will see that the best bets will come when you get into the first bullish breakouts or the pullback of the first bullish breakout. Okay, so for example, if you see here, this is the candle. So on 27th June 2023 at 2:15, there was a breakout candle. Okay, and if you see here, there was a non-stop rally here for, like, in you can see how many points. If you had entered here, you would have made in a week's time, so week and 1 hour, like 7 days and 1 hour, 1,439 points in Bank Nifty. Okay, so imagine Bank Nifty 1,439 points. If you had just bought one lot, imagine that too in the money if you had bought, it would have been a great buy for you. So similarly, we'll go for a bear setup as well. So I will show you a case where it was range bound. Like for example, if you see here, so you can see the market was range bound here. So we will take these candles. Okay, I'm just randomly picking it up. Okay, and I'm just taking the last 21 candles. So this bottom is the range. Okay, so if you see here, so anytime the market opens above this green, I will look only for bullish bets. anytime it opens below the red, I'll open only for bearish bets. See, the simple reason why Oliver Wallace explains, I'll put it in very simple words in my understanding, is basically because, see, the reason why you buy a stock or you sell a stock is because of the location. Okay, so why location is important? What do I mean by location? Okay, so usually the best deals you get is when it is very close to the 21 EMA. So you can use 20 EMA if you don't want to use 21 EMA. It doesn't make that much of a difference, right? I use 21 EMA because it's a Fibonacci number. Okay. See, the whole idea behind taking trades near the 21 EMA is because, see, basically, once it crosses the red line, this is too far away. So though it has opened here, so it has given me a 1,000-point move. Okay. But see, ideally in this case, so now is it a bearish territory or a bullish territory? So it is a bearish territory because the 200 EMA price is greater than the 20 EMA, and the 20 EMA price is also greater than the stock closing price. Okay, see, there are two ways of entering the trade here. The first way of entering the trade is you find a stock which is closer to 20 EMA and it has moved. Okay, so in this case, this is not very close to 20 EMA. It is a little far away from the 20 EMA. So if you can see here, ideally I would like something to originate here, or maybe from above the 20 EMA to go down below the 20 EMA. That is my setup usually. Okay, I'm just explaining what is the magic force so that I can go into the charts for you to understand when I show you certain moves, certain trades which I have taken. Okay, so if you see here, so in this case I missed the move. So usually what people will do is they will get the FOMO and they will usually jump onto the candle which takes out the low, which is okay. Okay, so the next better bet will be, so when it is in bearish territory, what candle are you looking for? Are you looking for a green candle or a red candle? So a bear candle is a red candle. You are not looking for a green candle. Okay, so whenever there is a color mismatch, okay, the color mismatch is what? See, for example, if you see here, there is a color mismatch here. In this case, you mark the high of this. Basically, you see a green color. So whenever the low of this is taken by red, you enter here, putting a stop loss here. Okay, and you just see the move, how it has moved here. You place a system order, basically more than 1,000-point move in less than a day, right? So basically, this is the second strategy. The first strategy will be to enter close to 20 EMA once it has breached here. So here, since it's moved, okay. I think Prasanna has created a poll, so you can also answer that. So basically, there are two ways to enter again. So one is, let me again go to the bull, because primarily I'll be explaining and talking about cash market, so which will be mostly into buying. It will not be into selling or shorting. Okay. So the first best way to enter is this particular candle in this case here, because this range has been broken here by this candle. So this is more or less closer to 20 EMA. Okay. A bad place to buy this candle would be, buy the stock will be here. Okay, and the reason why it will be a bad place, it is a 3rd July 9:15 candle, because you see the distance. See, whenever the price of the stock has moved far away from 20 EMA, and the 20 EMA is also far away from 200 EMA, usually the market tends to be range bound, or it comes down, because usually there are only two states in the market, as Oliver Wallace says. One is the wide and one is the narrow. Okay, so usually the best trades are got when it is in the narrow state, whether it is a breakdown or a breakout. See, for example, if you see here, it is a very narrow state here. So if you can see, it has been trading in a very narrow range here for quite some time. So the moment this range was broken, you see the move, right? So again, this is a narrow state here. So the moment this range was broken, are you able to see the kind of move which has happened here? So, so you again, if you see here right now, where is the market? See, the price is at 200 EMA. Okay, the 200 EMA is greater than 20 EMA, and the price is less than that. So what I will be looking for is near the 20 EMA or in between 20 and 200 EMA. I will be looking for a green candle. Like for example, let's say this. You take this as an example, right? So in this case, this would have been a right entry point. So, but let's take this example. Okay. So right now, the moment you see here, the moment the green is taken by red, you see the move. The moment the green is taken by red here, you see the move. So you can keep it near the open of this as well. So the whole idea is I want to capitalize on such moves. I will go into the charts and I will show you certain trades which I have taken. Okay. So if you have gone to the Prasanna will be sharing with you both the scanners by end of this session, but I will show you certain trades which I have personally taken, which has resulted in a wonderful move. Okay. So for example, the VCP scanner will be provided by Prasanna in the group. So you can just have a look at the VCP scanner as and when you are able to get access to it. Okay. So I will probably take up some stocks which I have traded so that you will be able to understand what kind of move, why I took certain things, not CUP. So let's take. So far, is there any questions before I can move on to the charts? Anybody wants to ask anything? Feel free to ask. I'll just pause for a minute. Any questions? Okay, so let me just move on to the screen share of the next thing. Okay, so that you will be able to understand what exactly I'm talking about. Okay, is my screen visible now? Wonderful. So let me. I am not able to recollect off the cuff what bank it is. So basically, let me take an example of a trade which I took very recently. So maybe let me just take an example of what can I take? Kajaria Ceramics. Okay. So this came up in my radar a little while back, basically as a VCP scan. Okay. So I think I took this trade here. So for example, if you can see here, so this scanner Prasanna will give you access. But basically, if you see here, this scanner, when I saw this in the morning, okay, I saw that this was a great place where it had originated here. Okay. So this was the bull candle which came here. So I was waiting for the pullback. So my pullback is usually around 33 to 50%. That is the range in which I look for the pullback, Fibonacci retracement. So when I got it somewhere around this range is when I entered, and the stop loss was below this candle. See, the whole idea behind keeping a stop loss below the entry candle is because, see, the reason why you entered a trade is because of this candle. So you can see here, this is a big bullish candle. So as you can see here, huge wick into the bottom and a huge body of green. Okay, and as you can see here, if you had entered here in less than 2 days, like for example, in less than this is almost 4 days, right? Less than 5 days, you get almost a 6% return. Okay, so again, if you see here, the moment it goes wide, it usually comes back to 20 MA. Okay, so again, once it comes to 20 MA, the moment the color changes, like for example, the color change, so the moment this high is taken, I will enter. So this is the candle which took out the high. The stop loss will again be below here. So when I take here, so again, if you see, you got a move of almost 12%. So you can play this color change game again and again on the same stock which is on the VCP radar. So usually the reason why you will be able to play the color change game is only when it is closer to the 20 EMA or 20 WMA, whatever you take. So if you do the color change here, for example, if you ask me, Prashant, can I enter here? See, for example, there was a red candle here. The red was taken over by a green. Yes, technically yes, but the odds of you getting the returns what you will expect in the case which happened here, like for example, we see this red was taken over by green. So you see the move here. So similarly, a red was taken over by green here. You see the move here. So the move you will get when you take it closer to the 20 MA versus far away from 20 MA, the probability becomes less and less. See, the whole idea why we want to take it very close to the 20 MA is simple reason is because, see, I have been seeing a lot of people drawing the charts in the group. See, the problem with most of the people is, like, see, for example, some people draw this kind of an angle. Like, for example, you take this here. So this kind of a breakout you guys draw. Okay. So usually you don't draw these kind of breakouts. So when you draw these kind of breakouts and you enter these kind of breakouts, maybe it is right sometimes, maybe it is not right sometimes. But what I have seen is the 20 EMA is very reliable. So 20 EMA or 20 WMA or usually is a friend. So you can trade along the 20 EMA, which acts as a support. So the best candles will be candles which originates and goes below 20 MA and zooms up above 20 MA. So you will see the best trades or the best setups. So you see the best moves here. So this is the VCP. I have added all the VCP stocks here. So let me show you some of the best stocks which has come up here. Say for example, let's take IOB. Okay. So IOB, you see here, it started below the 20 MA and you see the move which it made. So the moment this red was taken out, you keep it 1 point above this, and you see on the same day you would have made 10% return. Okay, so see, how will you get this scanner? You go back to the training in Prasanna's YouTube video. So I have told you how to create the scanner in TradingView itself. So you can just enter the details about how to set up the VCP scanner. All you have to do is just add it and get it into the watch list. So once the market opens, all you have to do is sort it based on ascending, descending, and you see the location where it has originated. Like for example, if you see here, we'll take this Ashapura Mine Chemicals. Okay, so in this you see the kind of gap between the green and how it is opened, right? So I usually am not very comfortable when it has moved so much above the 20 EM. So my setup is usually something like this, where it starts just below the 20 EMA, and you can keep the stop loss just below this candle, low of this candle, and you see you will have multiple candles. So within like 3 days, you have almost like 14-15% return. Okay, see, the goal why you are entering this kind of setups is because, again, you see here it is a range breakout. It has broken out from the close, has been above all this range. There are two reasons. So the reason why this works out much better than any of the other things is because the risk reward is great. And see, the beauty about these trades is not about how much money you make, but how less you lose. I hope you understand the value of cash market trading, because a lot of times people feel options is where you can make a lot of money. I don't agree with it necessarily, because usually when you have cash market, you have the flexibility to hold on to your trades without worrying about the expiry, etc., unless you are an option seller. Okay, so here the biggest advantage is you are able to capture the biggest moves. So when you get the move here, like see, one more concept which I want to tell you before I can probably open the floor for questions, because the concept in and of itself looks very silly. Okay, so once you get the VCP scanner here, okay, all you have to do is select this stock here, add it. Like you can select multiple stocks. You can just select here, just add all selected items into the watch list. Okay, once you get into the watch list, during the market hours, just sort it. Okay, and look where the first candle has opened. Okay, see, for example, you see this particular candle. Okay, so this is a great candle for entering. So usually whenever you see a candle like this which is moved big, what I usually do is I mark the levels. So you see here, you mark the high and low of this, and 33 to 50% is a good level for you to enter. Okay, what you can see is usually a U-turn from that 33% level for you to get a good trade. Okay, and the whole idea behind taking only VCP stocks. See, for example, I started learning until I got in touch with Prasanna. I had no idea about RSA. I was purely trading based on trend lines, price action, candles, etc. But now, with my understanding of RSI and me studying RSI a little bit more, what you have to, I also read from some other trainer about a strategy called grandfather, father, son. Okay, see, the whole idea about that is basically if you want to know whether a stock is bullish or bearish. Say, for example, let me take Nifty itself as an example to explain this concept. Say, for example, you take Nifty. Okay, so what is the value of Nifty? So Nifty on a monthly basis is around 65. Okay, so on a weekly basis is it is around 65. Okay, what is the daily this thing? So it is around 47. So what it means is, see, for example, the monthly time frame is like the grandfather, okay, and the weekly time frame is like the father, and the daily time frame is like the son. So usually the son inherits the quality of the grandfather and father when they are in sync. Okay, when they are not in sync, that is when you have to be careful about a range bound or a volatile market. Okay, so what happens is usually when I will wait for the RSI to come near 40. It might not, for all reasons, it might come or it might not come. But usually you will see that, when monthly RSI, weekly RSI are above 60. Okay, so usually the market just doesn't fall. Like for example, it is at 19,400. Suddenly it will not come to 12,000 until some calamity happens. Okay, that without any reason, unless a war breaks out. So usually what will happen is it will keep taking U-turns. So you wait for it to come to 40 EM. Okay, I mean the RSI to come to 40 and wait for the bullish bounce. Like for example, the bullish bounce which I am talking about is the candles what I was talking about, either a bullish engulfing or a pin bar, whatever candle is there, and you enter into that candle whenever it touches the 40 MA and you see that bullish bounce, and you keep the stop loss below that bullish candle. So usually you will have a reward of multiple candles and the stop loss will be just one candle. So this is one particular strategy because of which VCP works. Why VCP works? Basically because the VCP scanner, one of the criteria is, if you see here, the RSI on a daily time frame is above 55. Okay. So basically if the RSI on a daily time frame is above 55, I'll just make sure that, like see when I go into the VCP scanner here, whatever stock I pick, like for example, let me take Kalyan Jewellers. So what is the weekly time frame? So it is around 78. So the daily time frame is around 79. So when in a 1 hour time frame, I will not look to buy here. Basically, I will look for it to come to anywhere between 40 and 50, because usually it is like this, right? See, for example, if somebody's batting average is 2, okay, so or let's say 100, okay, so there are two ways of doing it. In 5 matches, he has hit 100, 100, 100, 100, okay, but assuming he has hit only 80 in 4 matches, okay, so which means his net score, so he has to actually score 500 runs in 5 matches. His batting average is 100, okay, so if he has scored only like 80 in 4 matches, so he's only reached 320. So in one match he will be scoring 180 runs, so 500 minus. So what happens is whenever it comes to around 40 RSI, it takes a U-turn and goes into the upward direction. So that is when I look for a convergence. So I think this is also beautifully explained in one of the scanners by Prasanna, which is called the RSI WMA swing strategy. It is also available in Prasanna's channel. Please look into that particular scanner. So if you don't know, let me explain that very simply here. See, for example, whenever you see here what that scanner tells is, the first time it goes above 60 EMA. I mean, whenever RSI goes above 60, okay, this particular candle. You mark the high of this candle. Okay, so for example, I have marked this high. So whenever this high is taken, you place an entry here, just 1 point above it, and keep the stop loss below that candle. Okay, you see here in almost in 2 days, it has given a 15% move. Okay, so this is the RSI WMA scanner. So you just go through Prasanna's video. He has elaborately taken stock. But only modification I am telling you in this strategy is, you select this RSI WMA scanner strategy only for VCP stocks. The simple reason is because the VCP stocks already have momentum. Okay, so what we are doing is we are cashing into a stock on a daily time frame which is already having a momentum which is above 55, maybe closer to 60. Okay, and we are looking for a retrace in RSI which is coming to 40. And you are looking for a bullish pattern, whether it can be bullish engulfing. I like to keep it very simple. The elephant bars is nothing. For example, this Kalyan Jewellers, this is an elephant bar. Okay, so the reason why this is an elephant bar is because you see the size of this candle compared to the candles nearby. So all these, it is in one candle has eaten up almost 45 days of price action. Okay, so this is not you and me buying. It is an institutional footprint. This is exactly what Prashna says. So obviously, that it will not go up. So what they do is they get the best average price between 33 to 50% of Fibonacci of it. So if you are looking for this level, or like which is the high of this particular candle, okay, probably you might not get that level anytime soon. So I'll give you another example before I can open up the floor for questions. Okay, I'll take an example of black box. Okay, so this was available in the scanner. Like for example, if you see here, this was the breakout candle if you see here from this range. So this one candle has taken out if you see the size of this candle, it is much bigger than any of these candles you can see here, almost 40-45 weeks of candle. Okay, so if you had waited for the high of this, the price to come to this high of this candle, you would not have got an entry. I'm only talking about quick swings. Okay, so usually the 33% mark is a great place. Say, for example, this 33% mark. If you had placed an order here, so in like almost in less than a month, you have got 35% return. Okay, so this is a stock which you will get in one of the scanners which Prasanna has already shared it in the group. Okay, and so whatever scanners I have shared here, I think what Prasanna shared here, it is on a weekly, it is on a 1 hour or 25-minute time frame. But you are free to go and play around and change it to whatever time frame suits you, whether it is 1 hour or daily or 4 hours, whatever. So I am pretty much done. So it's a very straightforward strategy, but don't get fooled by how simple the strategy is. Usually, what I've seen is the simpler the strategy is, the higher the returns are, because any Tom, Dick, and Harry can take it up. It's just a matter of taking 21 trades. I'll open the floor for any questions if you guys have any particular doubts or questions in this strategy. Prasanna, in case you wanted to ask me something also, you can ask in case so that to represent other people, maybe something. I think, Prasanna, I think the SMA by KGS is best, because a lot of people will be not have the pro version of this thing, so you can use multiple EMAs in just one indicator. Yeah. Yeah. So what is the best confluence of RSI between RSI? I mean, what is the best confluence of RSI and 20 MA? Uh, so like, what exactly you mean by confluence? So basically, it is very straightforward. I look for a bullish bounce from 20 or 21 EMA, whatever you are using. Okay. So bullish bounce means I choose a VCP stock where it is corrected, and I look for a big candle. So bullish candle means basically it should engulf the previous at least 4 5 candles, or it should be a pin bar candle. So ideally, this will show more bullishness. So whenever this kind of candle comes up, I don't jump into that candle. I look for the 33% or 50% retracement. Ideally, it is safe to get the 33% retracement, because whatever I'm talking about is a short-term trade. So I think I traded this stock, for example, Central Bank. So you can go to the 1 hour time frame. I think Prasanna is sharing the screen. I'll show you the kind of entry what I took. Okay. So for example, uh, yeah. So can you guess where my entry was? If you see here, so Prasanna has taken the trend line, right? Yeah, exactly. So the range breakout happened in that particular candle. Like for example, there is a big candle in between where the triangle has been drawn, right? So I know that that is an institutional candle. So so when moment I saw that institutional candle, I became vigilant that the company is trying to average the price by lowering it, because usually whenever people stop loss will be below this big candle. Okay, so since there was next candle did not even go above it. Okay, I did not take entry in that particular candle. So I took entry exactly here. So for example, the moment it crossed I think it was on July 9th. So the moment, August 9th, the moment it crossed the high of this particular candle, I just took an entry there and placed the stop loss right below this candle which crossed that. So usually the one thing what you can do is you can add up. I don't usually the stop loss will be below above the below the big candle on August 2nd. So because I am taking that candle as the criteria for me to enter. So you see here, within like one day on Friday I booked profits for this particular. See, the reason why I am saying this particular specific thing is because, see, my goal is to book 5 to 6% profit in every stock I enter. I am not looking for a 20% move or a 30% move or a 40% move. Okay, I'll tell you the reasoning. I think I forgot to cover this. I will finish with this. Basically, the whole idea is because you want to enter certain things which are predictable. So the whole idea in stock market is you want to keep making money. You don't want to become a millionaire overnight. You want to keep making money and compound it. So can you just take a guess? See, if you do 15 trades, which gives you 5% return, can you guess what will be your capital if you started with 1 lakh? Your capital will be more than 2.1 lakh. Okay, if you just book 5% profits in 15 trades. Okay, I am talking about including the brokerage. If you do, you will make close to 2 to 2.05 lakhs, almost 2 lakh 5,000 will be your return. So I have been able to see that 5% is a very predictable number. Most of the stocks easily move above 5%. Some stocks give you moves of 30, 40, 50% also. For example, Jyoti Labs is one particular stock which I took a trade. So it had a huge move. Okay, so I entered it around 209 or 207, somewhere around that range I entered. And I booked profits at all-time high, 232 something I booked it. So I thought it was a good exit. But what happened is that stock moved till 300. So Jyoti Labs you can just take. Yeah. So if you look at it here, this is a crazy move. Okay, so around 209 is when I took this entry, probably somewhere around this green candle. So from below the EMA is where that green candle is there, right? That is when I somewhere around there is when I took the entry for that particular stock. So the moment I started seeing wicks, right? So I booked my profits. Okay. So what happened is immediately after here it had a small consolidation. It zoomed up in less than. So a lot of times when people look at this kind of big moves, they will kick themselves and say, "Man, I missed the move." No, but the whole idea is we want to make consistent profits in cash market. In cash market, the magic is always in compounding. You start with 2 lakhs, you book 5% return, you make 2.1 lakhs. Then On 2.1 lakhs, you make 5%. It is not 2.2 lakhs. It is 2.22 lakhs. So what happens? It compounds. So the whole idea about taking swing trades is basically to compound your money and not to make a huge return in one trade. That is my style of trading. So my strategy is very simple. You take a bull bounce from below 20 EMA and it has to go up. RSI should be in confluence with that, and it should be a VCP stock. That is the whole. I, I think there is one more doubt actually. Rajarajan has asked, why is it called Magic 4? Is actually uh, so basically that's not the name which I coined, Raja. That was given by Oliver Wallace. See, the whole idea behind why it is called Magic 4 is simple because it provides a range. So any range breakout is when usually you get big moves, right? So you always find a stock which has been consolidating and you wait for the breakout. You don't participate before the breakout. Okay. So whether it is a breakdown or a breakout, usually the best moves are got when you are able to spot it. So that is what the scanners can help you there. Elephant bars, which is there, right? Like for example, maybe Prasanna, if you can share the screen of one of the. No, I think, yeah, I think you already shared it, right? So people can open it. So if people can open the scanner and you just change it to weekly time frame, okay, so you will be able to see Kalyan Jewelers, not Kalyan Jewelers, you will be able to see GMM Podler, these kind of good stocks before it moves. So similarly, Black Box was one of the stocks. I remember chatting with Prasanna just exactly a month back. That is when Black Box just broke out. So similarly, definitely have GMMP Podler in your list because that is going to move big time. And yeah, let's see.
Good evening. What is being taught in addition to the usual course that was taken by you, which I attended? The crash course, is there anything additional that you are teaching uh, which was not taught to us in the usual regular course? Thank you. Ah, okay.
Hi, bro. I'm fine. How are you? ஓ இது கிளாஸ் தமிழ் லாங்குவேஜ்ல இருக்குங்களா இல்லை இங்கிலீஷ்ல மட்டும்தானா? லாங்குவேஜ் தமிழ்லயும் இருக்குங்களா? கம்பைண்டா இருக்கும் தமிழ் இங்கிலீஷ் இல்லை ஃபுல் அண்ட் ஃபுல் இங்கிலீஷ்ல தான் இருக்குங்களா? ஓகே ஓகே. இன்கேஸ் ஓகே ஓகே ஓகே. இல்லை வேற நான் ஓகே 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 ஓகே. So in case I have any doubt, can I ask you in Tamil while class, while you're taking class? தமிழ்ல திடீர்னு எனக்கு ரொம்ப டவுட் இருக்கு அப்படின்னா தமிழ் கொஸ்டின் கேட்கலாங்களான்னு கேட்கலாம் கிளாஸ். ஓகே ஓகே இதுக்கு ஓகே ஓகே ஓகே. தேங்க்யூ. ஓகே ப்ரோ, தேங்க்யூ.